we're going to dive further into the realm of private markets. We are joined now by Achilles Global founder and CIO, Sachin Khajuria. Achilles Global is a private investment firm operating in public and private markets. And Sachin, you spent a lot of time at Apollo yourself before leaving and founding Achilles. What's going on here? You look at the negativity behind the stocks of these major alternative asset managers. This was the flavor of the decade, it feels like, for the financial industry. Why are investors so negative on these assets?
So it's good to be back. Look, I think long term, we're in the early stages of a supercycle for private markets. And that's driven by democratization, and it's driven by demand that's coming from demographics. But in the near term, it's not going to be an easy ride. So if you look long term, you're finding that demographics are powering the needs of retirees. There are more retirees, they're getting older, and they need diversification in their portfolios. And private markets products are a way to provide that. That's why you're seeing the convergence between public and private markets. It's a way to innovate, to create new products, to feed this need. And of course, the biggest prize, the ultimate democratization, is individual retirement accounts, 401ks. The industry is $15 trillion today. You could see it getting well ahead of 20 trillion. So, I'm long-term positive on these things, but short-term, there are issues. If you analyze why there are issues, where's the problem? Private equity is kind of stuck in a bit of a timeout in parts, whereas private credit is scoring touchdowns, is playing offense.
In relationship terms, they call that the doghouse.
In the doghouse, that's right.
But it's important to
knows well about that.
Am I in the doghouse?
No,
Did you get in the doghouse? Did my significant other get in the doghouse?
Listen, I want to pull on two threads there, Sachin. Number one, the demographics. Are we getting more retirees, and when does that start to reverse, right? Because the baby boomers are going to start exiting. And number two, getting into 401ks for these private assets, it's got to be great for the industry because you don't need the liquidity in your 401k, right?
So first of all, demographic gets global, right? So that's why you're seeing private markets firms being able to raise private credit funds and deploy capital, not just here in the United States, but also in Europe and around the world. And I think the overall demographic trends are very positive. If you look at individual retirement accounts, they're used to paying relatively low fees, a few basis points for daily liquidity, daily index funds. But the performance is not always great, and certainly it's not diversified. And so the idea really is to add private markets products into that, diversify those portfolios, and you're looking at $5-6 trillion of AUM which would come in, and that's really, I think, the big prize for these firms.
But what are they going to be actually acquiring for these plans? Is it more private credit? Is it this infrastructure, real estate kind of play that you're seeing so many of these firms get into? Because to the point that you're making, private equity has been sitting on assets for what feels like forever, right?
So if you take private equity, the issue is the vintage. It's the vintages which are kind of either side of the pandemic. Those where you get, a toxic mix, really a difficult mix of issues. You have write-downs. You have a tough exit environment. It seems like the exit environment's about to open. There's light at the end of the tunnel, but actually it's an oncoming train, right? The best firms, the winners, right, they're going to be able to deploy capital today, as well as deal with these historic issues. And what you'll see in IRAs, what you'll see in 401ks is a mix of products. You'll see private credit, you'll see private equity, you'll see all of these things to enable to diversify. It doesn't mean I think you'll have a total switching, but if you have 10, 20, 30% of those accounts moving into private equity and private credit, I think that'll be beneficial for retirees going forward.
What does it mean for public markets?
Public markets have kind of been on the back foot a little bit, right? I mean, you've seen a lot of companies drop out of the public markets, but they're still going to be important.
And IPOs have not been. I mean, we just saw Wall Street bonuses yesterday. Debt underwriting did great. Equity underwriting, not so much.
And hence, you're seeing a difficult exit environment for a lot of private equity companies. But I think it's, let's say, a bit of a rebalancing. The irony is, if you have additional trillions coming into private equity firms and private markets firms in general to manage assets, that's actually going to generate billions of dollars of management fees for them. That's going to benefit the equity of these firms. And ironically, the equity of these firms is actually in the S&P. It's public, right? So you'll see a rebalancing from public dominant to kind of a mix of public and private, and this will play out over the next decade plus.
Just to understand the situation, if you got into a private equity fund in 2018 or either side of the pandemic, what are the expectations for returns by and large today?
So number one, a return of your capital. that's actually a tougher hurdle than you might think. And number two, a sort of modest return on your capital. I think if you're, every fund is different, every firm is different, but if you're making somewhere around 10% for a fund that hasn't really worked out that well, you probably just move on and look to see whether they're doing good deals today. And if they're doing good deals today, and I think a lot of today's playbook has adapted to higher interest rates, to tariffs, to a different environment, then I think, you'd think that's an acceptable outcome. The difficulty is when you're not getting your money back. And that's why you're seeing the secondary market so active. You're seeing secondaries active because LPs need that liquidity. They're saying, it's been 10 years, these are 10-year funds, right. I'm only halfway through a 10-year problem, I need to get some money now.
Pretty quickly here, because you do invest across public and private. When you look at valuations in the market today, credit spreads are very, very tight. A lot of people getting worried about just broader market valuations. Where do you stand?
I think the economy is flashing some warning signs, right? But these are amber signs, they're not red. If you look at activity, employment. And so I think the valuations are skating on thinner ice than, we might think. And the biggest issue really is the geopolitical risks and the policy uncertainty. So, I would expect some kind of correction or pullback. But unless the economy, rather than slows down, unless it just stalls, I wouldn't expect more than a modest pullback in valuations.
All right, Sachin, great having you on the program. Hope to get you back soon. Sachin Khajuria there, Achilles Global founder and CIO, talking to us about public and private markets.